I just invested $72,500 into Facebook stock and I'm down over $6,000. But I'm super bullish on the stock, and because I'm down, that means that you can get a better price for the stock than me and have greater returns on the option trades I'm going to mention later in this video. I'm going to show you covered calls, selling puts, and credit put spreads later in this video live on my screen after I do a deep dive analysis into Facebook stock itself. Real quick, all I ask is you drop an early thumbs up. It helps my hard work, and rumor has it, it will make you stupid rich. Also, if you find value in my option experience and want to follow my 7K to 17K challenge, which I'm up 4% in the month of October, more than double the market so far, then you can submit an application for a free call with my team in the first link in the description. Facebook market cap is around $928 billion, and it has exited the $1 trillion club after its recent pullback. In the past month alone, the stock is down over 12%, down much of last month, and down in October. Facebook stock is really bleeding out here. I was shocked that Facebook's 6-hour-long network outage Monday caused a surge in interest in alternative platforms, unfortunately. People are just not forgiving, and honestly, I just don't blame those people because an outage is pretty unacceptable, especially if you have some important communication to do. That's why I always tell the truth and stick to the facts, because I know it's all about reputation, and I think in terms of decades time rather than the short term. And this is also what I apply to my investing strategies. Messaging app Telegram says that it added more than 70 million accounts during the outage as WhatsApp and Facebook Messenger were down, and that's just a tiny fraction of Facebook's 3.5 billion users. And no, those folks didn't necessarily cancel their Facebook memberships and switch over to Telegram entirely, but Facebook's fumble does seem to give Telegram an opportunity to introduce itself to a lot of Facebook users and perhaps steal a bit of growth from the social media powerhouse. That's part of the reason the stock has pulled back and not recovered as much as I thought it would. Facebook also had a whistleblower, an issue with the Congress, but Mark Zuckerberg addressed the safety, well-being, and mental health of Facebook users and responded very well to it. In quarter two, Facebook reported revenue growth of 56% and earnings per share growth of 101% year over year. It also reported that there are 1.9 billion active users and 2.9 monthly active users. It's hard to find another company of Facebook's size that still manages to grow the way it does, and that's without any significant impact from augmented or virtual reality. That growth is what got me very excited to be an investor in the stock, and I also believe that they have a significant data advantage that's going to continue giving Facebook a huge advantage. As you can see, Facebook has beat earnings 4 quarters in a row by an average of over 60 cents per share. At a price to earnings of 24, I expect next earnings to add at least $15 to the share price. With that being said, let's jump into my screen and take a look at how I'm playing Facebook using stocks and options. All right, guys, let's take a look at my Facebook position right now. So I have $65,800 in this stock right now, and I'm down a total $6,752 on the stock. I do have 200 shares, and it is about 5% of my portfolio with an average price of $362.76. So I did end up buying Facebook a little bit expensive, and this is one of the stocks that I have lost money on. This doesn't actually happen to me very often. However, I am not worried. I'm still very bullish on the stock, as I've been mentioning. I want to specifically talk about the options that I'm playing, because when I enter a stock, I'm usually not just entering the stock and just crossing my fingers and hoping that something good happens to it. In fact, almost all of the time when I enter a stock, you guys can actually see here, I have 7 contracts open on Facebook shares currently, and they are up $593, and I continuously make similar amounts of money by doing one simple strategy. The first strategy I want to talk about is covered calls. If you guys notice right here, I have 2 different covered calls. I have the 365 call, which still has $4 worth of premium, and since each option is worth 100 shares, this is actually $400. By November 19th, which is basically 1 month and 1 week from today, I'm going to be collecting $400 more in terms of the theta or the time decay of this option. Unless Facebook reaches $365 per share, then I will lose Facebook shares. However, if we see a recovery and it doesn't touch that price, then I'm going to be collecting this $400, and I'm still going to be keeping Facebook shares. So this is a phenomenal position to be in, because not only am I long the stock, but I'm also collecting income along the way. Now, I do have a second covered call position, and that is going to be the 360 covered call. Now, that one does expire 10/22, October 22nd. So for this option, I went a little bit closer in terms of expiration date. And usually I don't do this. Usually I keep it simple by having the same expiration date. However, I recently purchased more shares of Facebook, and when I purchased those shares, I wanted to go for something a little bit more shorter in nature. So I went for the Facebook 360 call, which is a little bit closer to the money. The reason for that is because I actually got a very good price for Facebook. If if I go down, the price that I got is probably a lot less than what I originally purchased the stock for. I might have been in the stock at probably like $380, but then when I purchased 100 more shares, I did so at $349.35. So for me, I was very comfortable selling the 360 call option because at the worst case scenario, I'm still going to be selling the stock at $360 per share plus collecting that short-term premium. So I wanted to diversify myself in terms of the covered calls. You don't always have to do the same covered call in terms of strike. If you have multiple hundreds of shares of a stock, it doesn't have to be Facebook. You can be American Airlines or Palantir, or I know there's some other cheaper stocks that people are really into. You can always run this strategy on any stock that you choose as long as the options are liquid. So for me, I really liked Facebook, not only because it's a long-term growth story, but also because the options are very liquid. There's a whole bunch of volume, there's a whole bunch of open interest, and that's going to be an advantage for selling covered calls because a covered call strategy usually for me is looking like a weekly strategy where I'll open up the position on Monday or Tuesday, and then I'm usually rolling or closing or just letting it expire on Friday. To be honest, it's mostly just letting it expire because if you did your job correctly, you don't actually have to lose the shares. You just collect your premium and you let the option expire, and there you have it. Your Friday's fantastic and you do it all over again on a Monday. So for me, Facebook was a very strong play for covered calls, and basically what I plan to do is I want to add some more money into my portfolio, and then I also want to buy 100 more shares because in this case scenario, right, when a stock falls and you're down, for me, I'm down 9.31%, down like almost $7,000. That's fine because I have a long-term perspective on the stock, but what I can do to be taking advantage of the lower prices is actually buying more shares. I like to buy 100 shares of stock at a time because me personally, I don't just like to hold stock. I like to have options on those stocks. So what I'm going to be doing is actually added $20,000 more to my portfolio. And the goal with that is that I want to buy 100 more shares of Facebook, and I'm probably going to do it at the current price of about $329 or $32,900. And that's because I want to lower my average cost, because the lower you get your average cost, you can continuously sell covered calls and you can do so at a lower strike. Because if I wanted to sell covered calls right now for maybe next week, the 360 call option isn't going to have a lot of premium. And the problem is I can go lower, but if I go lower, then I'd be getting rid of my Facebook shares at a lower cost than my average cost. And I do not want that to happen. The game that I'm kind of playing right here, first of all, I don't need to add more money because not everyone's going to be able to just put more cash in their portfolio all the time. And I'm certainly not able to do that all the time either. However, when I do see an opportunity, when a stock has pulled back, it's going to be a very good candidate for a covered call, especially if you can buy the stock cheaper than your average cost or just cheaper in terms of its relative history. So for Facebook, we had a huge pullback. In 3 months, we're actually down 4.84%. And I know in the past 3 months, the stock market has not done so badly. And if I look at the 1 month, it's not going to look so good. We're down over 13% on Facebook stock. So that's what makes it a very good candidate for covered calls. Now, the second strategy that I do want to talk about is selling puts. Rather than just buying shares of stock and doing a covered call by selling a call option, that's out of the money or near the money. Near the money is also fine. Another strategy that I'm running here that you guys will notice in my account is these right here. I have different puts that I have sold. Now, 2 of these are actually put credit spreads I'm going to talk about very shortly, but one of these is a put that I have sold. So I have sold the 315 put. And the reason for that is I would love to own more Facebook shares, but I don't necessarily want to buy it at the current price, although I will. It would be even better if I can purchase Facebook shares at $315. And that is actually a better opportunity because I'm going to be getting a lower price than the stock is trading at currently. Rather than buying the shares at $329, by selling a put, I'm not only collecting premium, I'm getting paid. I'm literally collecting money to wait to buy the stock at the price that I want to buy it for. So $315 for me is a very good support level for Facebook based on the technical analysis that I have done. So $315 per share would be a fantastic entry price, and it would also reduce my average cost. So it's going to be a double whammy. Now, the third strategy that I want to talk about is put credit spreads. Put credit spreads are fantastic for small accounts because I also understand that not everyone has a whole bunch of money to play with in terms of their portfolio, but this is actually what I'm doing in my Scaling with Spreads challenge. I'm taking $7,000 into $17,000, and I'm mainly utilizing put credit spreads and call credit spreads and iron condors, but put credit spreads are really my bread and butter. And the reason why put credit spreads are so powerful is because, well, if you take a look into my account right here, there's a 310 put and there's also a 305 put. What that means is I'm selling the 310 put option and then I'm buying the 305 put option, because if you just sell a 310 put, then you have to have the collateral in your account to be able to sell the 310 put. But instead, if you sell the 310 put, but then also buy the 305 put, even if the stock were in theory to go down to $0, your 305 put would be up $305 and your 310 put would be down $310. So you only have a max risk of $5, or because each option is still 100 shares, it's only a max risk of $500. So for $500 worth of risk, you can actually collect a whole lot of premium. And if I do some quick math right here, $1.35 minus 92 is going to be $42. That might not seem like a lot of money, but in 1 week's time period, $42 divided by my $500 that I'm outlaying is actually going to be an 8.4% return in just 1 week. Now, another thing is when you're selling a put credit spread, because you're collecting $42 and you're putting up 500, your actual risk is not 500, it's actually 500 minus the premium you collect, or in other words, minus $42. So your actual outlay is going to be $458. Now, if you take $42 and actually divide it by 458, you're going to be very, very close to about 9.5% or so, almost 10% return in a single week. So this is one of the most powerful strategies that you can use, especially for a small portfolio, because you really don't need that much money. You only need $458 in this scenario, and in most of the trades that I make in the private group, I'm making small trades around $400 to $500 worth of capital, and we're usually collecting a really large percentage, say 6, 7, 8, or even in this case over 9% in terms of returns. So as you guys can see, I made $593 on these options so far, and this has only been 1 week's time period. So even though I'm down $6,700 on the stock itself, a regular stock investor would just be down that money. However, for me, I'm also down that money. However, I have hedged my downside. This is called hedging. When you're actually selling options, you're hedging against your long position by selling delta, or by selling options, you're actually short delta. You're short a little bit of the position, because even if the stock goes down, you have made some money and you actually have that money as a margin of safety. So my margin of safety per week is going to be $593, roughly, give or take, right? Option premium changes depending on implied volatility. However, for me, this is a much smarter strategy, because although I am down, I'm not as down as much as a stock investor. And this is the reason why I love options so much. Not to mention, you can make so much money by selling put credit spreads. I'm going to link a put credit spread video for you guys below. If you want to see my live trades, my option signals, have access to me, 2 different coaches, a licensed CPA, you can book a free call by submitting an application in the first link below for my private option Discord. Thank you so much for watching. Invest safely, and I love you guys.